Welcome to the Contractor Success Map podcast. I'm your host, Bradley Hart, and I'm an expert on how you can get the most out of your contracting company. The reason I designed this show is to help you turn your contracting company from a people-dependent money pit into a process-dependent cash cow to have the freedom you dreamed of when you started your business. Every Friday, we're releasing podcasts with information to help you get the most out of your contracting company. Be sure to join us at www.contractorsuccessmap.com. and subscribe to receive our latest articles and special offers. And the best part, it's all free, just for you.
Hello everyone, Norhalma here once again, welcoming our subscribers and podcast listeners. If you're new here, thank you for giving us a chance to share insightful marketing, accounting, and production tips and strategies for your construction business. It's episode 498, and today Sherry Hart discussed the solution to your construction company equipment dilemma. Let's get into it. Is it time for your construction business to invest in some new equipment? And if so, is it a more brilliant business decision and cost-effective to rent or buy? Black Friday, followed by Cyber Monday, is coming. The real question is, what equipment is on your business shopping list? It is all a question of your budget, income, cash flow, profit and loss, and taxes. Why you might need new equipment. The right equipment can enhance your processes, productivity, innovation capacity, and bottom line. But should you buy now or wait till a later date? A few reasons you might need to purchase new equipment now are because you have some big contracts coming up and need to increase production, your construction business is expanding at a fast rate, and or you need to replace some aging equipment to maintain your business's high standards and keep up with the competition. Evaluate your existing financial state. It can be easy to get caught up in the growth of your business without putting the necessary time into assessing whether you're financially ready to buy some more equipment. Try to look beyond your current situation to project your costs over the coming months or years, depending on whether you plan to hire or buy. You can reduce the financial impact on your business by using financing to buy the equipment. You may even get lower rates than hiring the asset, and after you complete your payments, you'll own it. Purchasing quality used equipment could be more cost-effective than renting over the long term. Examine your business as a whole. Short-term purchases without long-term plans can be costly. Consider these questions when drawing up plans to invest in more equipment. What effect will the new equipment have on our human resources? Will you need additional staff or relocate staff elsewhere throughout your business? Can the equipment you're replacing be used elsewhere in your business? The length of the job or project. A crucial deciding factor as to whether the right time to purchase more equipment is now is the length of an upcoming project, or the frequency of extra jobs coming up. Additional short-term work suggests hiring would be a better option. Likewise, if you need a highly specialized and expensive piece of equipment, it might be preferable to hire it. It makes more sense to buy for longer-term projects. Higher costs can add up quickly as a job gets delayed and pushes past its expected finish date. Usage and availability. Knowing that the right equipment is available to your business whenever needed is a significant advantage. If anything unexpected happens with your job, you'll have the necessary equipment to react and reschedule. Potential clients will also notice that you own the equipment necessary to complete their request, helping develop trust with your business. When you decide whether to hire or buy, consider the risk of your preferred hire company not having the equipment you want when you need it. Deciding to hire or buy. You can get the new equipment you need by renting or hiring or buying. Each has advantages and disadvantages, so it's worthwhile assessing your business's current financial situation, its current capabilities, and its plans for growth. Weigh up the pros. If you choose to purchase new equipment, the advantages over hiring will include the following: availability. You can be sure the equipment will be available when needed. Ownership. You own the equipment and can potentially get a return on it when you sell it. And additional financing. If using a loan to pay for your equipment, you might be able to get extra funding to cover transport, training, or installation. If you decide to rent the equipment, the pros include the following: cost, smaller initial investment; maintenance, the lender should handle insurance and maintenance; technology, you can usually hire the latest equipment available and should be able to upgrade as your project progresses. Will renting make your life easier in the short run while you consider buying at a later date? Will buying now be more beneficial to your business over the longer term? On the accounting side, if you buy before the end of the year, the Internal Revenue Code Section 179 allows for accelerated depreciation. If your purchase is less than $500, it is always a qualified expense. The bigger stuff is vehicles, tools mounted on a trailer, generator, specialty equipment. Depending on type, lifespan, and cost basis can trigger other tax reporting rules. Section 179 accelerated depreciation has been in place for many years. The reasons the 179 accelerated depreciation went into effect are: first, stimulate the local economy. Some purchases, such as QuickBooks, are purchased at local stores. Second, give the business a reason to grow and expand by adding new equipment and additional employees. And third, useful life ended long before the depreciation schedule ended years later. Everything comes back to two issues: taxes and cash flow. If you have the cash or can finance, do you need to buy a piece of equipment for the field? If you have the cash or can finance, do you need to buy a piece of equipment or software for the office? From an operations viewpoint, if you purchase either now, can you use it to make or save money? It's easy to assume that the deduction will always be available. Congress decides what changes year over year in the details of the deductions. At one point, several years ago, vehicles over a certain weight, like SUVs, had a cap on the depreciation deduction. They were considered luxury vehicles, and the extra features were unnecessary over the basic pickup truck. Summary: a wheelbarrow and a shovel are cheaper, but would a small Hitachi be more productive and cost less in the long run, which could give you more money to operate and grow your construction business? Taking into account the points above, you'll get a clear idea about whether now is the right time for you to purchase more equipment, either with your capital or through financing, or whether it's a better option to hire for the time being. What are your next steps? Talk to your accountant to discuss the pros and cons of hiring and buying new equipment. Have a word with your bank manager about whether you can get funding to purchase the equipment your business needs. And of course, reach out to me. I'm ready when you are. And that is another valuable information from Sherry. Remember, Sherry is here to help you. She can help you a little or a lot depending on your business needs. If you're confused about which product to purchase in our Fast Easy Accounting store or what services to outsource, you can always call her. Please don't hesitate. Our toll-free number is 1-800-361-1770 or our local phone line 206-361-3950. You can also send Sherry an email at Sherry, Sharie, Sherry at fasteasyaccounting.com. Our podcast promo code is still available for you to use. It's podcast20, PODCAST20, podcast20. Again, you can use it for a 20% discount in our Fast Easy Accounting store bookkeeping templates, or to enroll in our Construction Accounting Academy classes at constructionaccountingacademy.com. On behalf of Sherry and our team here at Fast Easy Accounting, this is Norhalma. Thank you all for listening. Stay safe and healthy.
And stay tuned for upcoming episodes on how to turn your contracting company into a process-dependent cash cow. Bye for now. Thanks for tuning in. You're listening to the Contractor Success Map. If you enjoyed the show, please leave a 5-star rating and review here on iTunes, and make sure to head over to www.contractorsuccessmap.com to subscribe to receive the latest articles and special offers. If you'd like to discuss your business strategy, simply click on the button labeled Strategy Session. And the best part, it's all free, just for you.